Hello traders, so I'm going to be placing a live trade and I'm going to show you guys everything that most people don't show you whenever they place a live trade. So I'm talking about, first of all, the analysis behind the trade, the strategy that I'm going to be trading, the lot size that I'm going to be using, the account size, the amount of money I stand to make if the trade goes in my favor, and also the stop loss. So first of all, I'm going to go ahead and place the trade and then we're going to talk about everything that I just mentioned. So I'm going to use 120 units, and obviously I'm going to use a stop loss as well. And my stop loss is going to go above this structure level here. And in a second, I'm going to explain to you why I chose to go to place my stop loss over there. So I'm going to place my stop loss around 2020. So that's going to be where my stop loss is. And that's the amount I stand to lose if this market go against me. Because I think a lot of people don't really show that. So that's the amount I stand to lose if the market goes against me. So I'm gonna go ahead, place a trade. So as you can see, the trade has been executed. The stop loss is right there. Amount I stand to lose on that trade. So because this trade is probably gonna take a day, so I'm gonna be pausing this video whenever when I finish explaining what I need to explain, and then obviously I'm gonna tell you at the end of the day how long this trade took. So first of all, this is I'm using an account size of just over 10,000, just over $10,000 and £10,000, excuse me. So I've placed a trade right now. So let's go ahead and talk about the reasoning behind me placing these trades. Why did I take a short position on gold? So, and what strategy am I using? Because that is a very, very important question. There's a lot of people that want to learn how to trade, but they just see a lot of things on the internet that don't really explain to them why a trader is doing what he's doing. And that's exactly what I'm going to try and do. So I placed this trade based on a 1-2-3 contraction. That's one of the strategies that I teach my traders. And when we're talking about and there's a lot behind, there's a lot of reason why I took this trade. So first of all, it's due to the fact that we've got a 1-2-3 structure here. So we've got a 1-2-3 structure here that was preceded by a bearish impulse leg. So whenever a market makes a bearish impulse leg and it puts in a corrective pattern, that corrective pattern usually breaks in the direction of the trend. So we got a break in the direction of this bearish impulse leg. But I always tell my traders, whenever you see a structure like this, the first thing you need to do is draw a box around that structure. It may seem crazy, but guys, trust me, it works. So you draw a box around that structure and you wait for the market to give you that break. This is not a signal to trade. This is a signal that the market gives you, that the market is about to communicate to you and tell you, listen, I'm about to go in that direction. It doesn't mean it's going to go. There's only 10% chance that the market will just break and just keep going all the way down. The market doesn't do that. So once you draw a box here, you wait for the break and you wait for the market to retrace, because 9 times out of 10 the market is always going to retrace to the middle line of the box. Why? Because the middle line of the box is the strongest part of this structure. So we can see already the market came back to the middle line, had a little bit of the market respected that level, and then we looked like we were going to keep going in that direction, but then we came back up. Now a lot of people that trade in this strategy might be a little bit scared and be like, oh no, the market is going up, it's going up. You have to understand something, and that's why understanding structure. If you don't understand structure, guys, like, don't even trade. And I'm going to explain to you why there's no reason to panic. Even if you, for example, you took this trade at the middle line of the box, let me show you why there's no reason for you to panic. And the reason is because we look at this, we're going to focus on this structure here. Now this is another corrective pattern. This is a corrective pattern, and this corrective pattern always breaks in the direction of the trend. The market moves down, corrective pattern, the market breaks. But I released a video a few days ago, and I talked about structures like this. A lot of my trading, a lot of technical trading has to do with understanding the structure of the Forex market. Guys, if you don't understand structure of the Forex market, contraction, expansion, go and seek some knowledge. Because looking at this pattern here, whatever happens, this move is very crucial in determining where the market is going to head next. So We had a corrective pattern. We had a break out of that corrective pattern. As long as the break does not go beyond the previous structure. Listen very careful, this is important. As long as the break does not go below the previous structure, as we can see, it hasn't clearly gone below the previous structure. Yeah? This move just turns out to be a complex contraction. Now, what I mean by that, again, I have to take you back a little step back to talk about bullish structure. Because the reason I took this trade, there's just so many reasons. It's not just about, oh, it's a 1, 2, 3 strategy. Oh no, it's a corrective pattern. The market broke out of the oh, it's a bearish market. It's so many different reasons. When it comes to trading, the analysis that goes into you understanding the strategy before you place a trade, the analysis is very, very important. Now, I know at the start of this video I just placed a trade, but that's why I'm going through the analysis. We have already done this analysis myself because this is how I trade, right? So let's talk about bullish structure, for example. Bullish structures and bearish structures, but in this case we're talking about bearish structure, right? And there's going to be a lot of lesson for you guys to get from this video as well, and I hope it's really going to help you guys. So let's talk about bearish structure. A bearish structure, this is the first thing I usually teach people that buy my contraction and expansion strategy, because this is the foundation of technical analysis. Structure is the foundation of technical analysis. So let's understand a bearish structure, and let's understand the whole. Let's see the reason why this trade is going to end up being a winning trade. Why there's a high chance, like it's never going to be guaranteed. Just like what you see on the internet, people take random trades, making crazy amount of money, and you wonder how the hell did they do it? Like there's no reasoning behind it. Why are they taking that trade? Now, so let's talk about bearish structure. Bearish structure, simply put, is a structure that consists of, we got an impulse leg, a pullback, a retracement, outside return, whatever you want to call it, and then we got another impulse leg that creates a new structure low. This is what a bearish structure look like. But obviously, if you go onto the charts and you try to look for a bearish structure in the chart, you're probably not going to find something that look like this, because the market, it cares only about rules. So let's go over the rule of a bearish structure and understand why there's no reason for you to panic when you're in a trade like this. So I'm going to label this as a starting point, just abbreviate it as SP, and this is going to be my initial structure low, ISO, and this is going to be my outside return. You can call it pullback, you can call it retracement, you can call it whatever you want to call it, and this is going to be my new structure low. Now everything that I'm drawing here has a lot of similarities to what is going on here. So if you understand this, then you're going to understand this. You're going to understand this trade that I'm in right now. Ooh, I need to move this a little bit away from my stop loss, because if I click my stop loss, it can just edit it or take me out or something. So let me just move it away from where my stop loss line is. So you've got a bearish structure here. Now the rule of a bearish structure, there's 3 different rules of a bearish structure, and this rule, the market needs to abide by this rule before you can call it a bearish structure. And the first rule is, this market, the first two rules are to do with the outside return, and the other rules to do with the new structure low. If you understand those rules, then you can go into the market, you can go into any chart, and you can identify bearish structures like a professional trader. It's as simple as that. So the first 2 rules are to do with the outside return, and the first rule of the outside return is, this outside return must retrace to at least the 382 Fibonacci retracement of the previous impulse leg. In this case, the starting point to the initial structure low. So you draw your Fibonacci retracement, starting point, initial structure low, swing high to swing low. This outside return needs to come into the 382 retracement. It must touch the 382 retracement. If it doesn't, then this is just going to be the impulse leg is just going to extend. So this has to come into 382 retracement. And then the second rule is that this cannot go above or beyond the starting point. So this has to stay within a particular zone for this market, for you to say this is a bearish structure. So basically what we're saying is, outside return of a bearish structure needs to be between the starting point and below. Needs to be between the 382 retracement and below the starting point, right? So this is where the outside return needs to be. As long as it's there, it's fine. It's absolutely fine. So now we talk about the new structure law. So the new structure law of a bearish structure, excuse me, needs to go above. I'm gonna get rid of this Fibonacci retracement tool. It needs to go below the initial structure law. So any part of the candle of the new structure law needs to go below the initial structure law for you to classify that as a bearish structure. So it doesn't matter if the break happens here. If the market goes above here and stops here, you have a bearish structure. It doesn't matter if this goes all the way there. As long as it doesn't go beyond, this is a bearish structure. This is a bearish structure. Oops. And this is a bearish structure. This is the bearish structure. So you see what I'm trying to say? So once the market forms a bearish structure, yeah, the next move is the market is going to repeat itself. If the market is to stay bearish, the market is to be in a bearish market, this move will just keep repeating and the market will just keep sticking to the rules, the 3 rules. The market will just stick to it. So for as long as the market is bearish, this is what you're going to find. This is the characteristics of a bearish market. You can look at any bearish market chart and you're going to see so many of these structures that the way the market is moving. So for as long as that market stays bearish, this will keep happening back to back and back to back and back to back. Now, why did I show you this? Let's go back to the chart that I'm showing you. Yeah. So let me just delete this to make things a little bit clearer, right? We have an impulse leg here, right? This is an impulse leg. And we've got, what is this? If you look at the retracement, right? That is a retracement. Bring in our Fibonacci. Yeah. Starting point to the initial structure low. We're just gonna copy. Let's just borrow this. Yeah. Put it there. Initial structure low. Outside return. Outside return. Take this. Put it back there. You can see we've touched the 382 Fibonacci retracement. This is where the outside return needs to be. Anywhere here is absolutely fine. Let's make that a little bit wider. Absolutely fine. So get rid of the Fibonacci retracement. Yeah. So move on to the next one. I'm gonna delete this as well. And I'm gonna get rid of, I'm not gonna get rid of the box just yet. I'm gonna delete this as well. New structure low. Bring it back down here. New structure low. Did the market go beyond the initial structure low? Yes, it did. New structure low. So the next move, the market is going to form another outside return. So this is going to be your impulse leg now. So again, let's look at the rule of the impulse, the rule of the bearish structure. Swing high to swing low. Retracement. Did the market touch the 382 retracement? Yes, we did. 382 retracement. Where is the starting point? Just there. So we have a zone. Again, we created a zone for our. So I'm going to put this line at the starting point. This is the line. I'm going to get rid of this Fibonacci. And this is our new outside return, which the market is currently in. So the next move of this market is going to be a move that's going to go down and create a new structure low. So if this comes back and breaks this structure, then we have a bearish structure. Yeah. So now technically this market, this trade is a valid trade to take. Now this is one reason why this is a valid trade to take, based on everything I just explained, based on structure. This is why if you understand structure, then you can understand why I took this trade. Now let's move on to the second reason, which is what the market has done currently. So I'm going to delete a couple of these things and I'll look at the structure itself. So looking at this structure, like I told you, this is a corrective pattern, right? A corrective pattern, and we have a market breaking out of that corrective pattern. And I made a video of over the weekend when I talked about the fact that this is how corrective patterns. If you need to understand these guys, and you're gonna understand why I'm taking this trade. If you have an impulse leg and you have a corrective pattern, this will most likely break to the downside, right? I'm actually gonna draw two of these diagrams, and I'll show you the reason why that trade is gonna be. Okay, this is not the. That trade is not gonna be. So this is the second instance, yeah. These two structures, they look similar, but they're gonna behave differently. While this is gonna do this, this is gonna do this. This could do this. Do you see the difference? This is a difference. This point here is the difference. This structure here. That is the difference between these two. Whereas in this case, the market has broken structure, has created a new structure low. This retracement, if it breaks over this, then the market is going to go in that direction. Go back to our chart. Move down. Corrective pattern. The break of structure. Did we break the initial structure low? No, we did. So this move here is only going to go break that previous structure there, and then it's going to come back down. This is exactly what's going to happen in this market. Exactly what we get in here. Look at this. This is a carbon copy of the structure I just drew for you right now. It's exactly the same. So now I've given you the reason why, or how I do my analysis, how I take my trades, and you see this is a full analysis on the reason I took a trade on this one. So what I'm going to do is, as this market is, as this picture is, I'm going to pause the video. As you can see, currently on 250 pounds profit. I'm going to close that video. I'm going to pause the video, sorry, not close the video. I'm going to pause the video, and then I'm gonna once we make certain movements, I'm gonna record it again. And guys, you're gonna know exactly how long this trade took. First of all, let's talk about when did I play. I placed this trade about 15 minutes ago. So this is on a Tuesday the 18th of April at around 4 o'clock UK time, 4 p.m. UK time. That's when I placed this trade. So now we're gonna see how long this trade is gonna take and whether this trade is gonna move in that direction. Okay. Hello traders, just a quick update on the trade that I placed 6 hours ago. So it's not more than 6 hours since I placed this trade, and as you can see, the market is already starting to move in the direction that I want. Obviously I do want this market to move down. That's the only way I can make money for those of you guys who are new to trading. It just depends on which direction you're betting against. So you can see that I'm currently in profit of about £453. That took nearly 6 hours. There's little volatility right now because it's 10 p.m. UK time. So we're just heading into, the Asian session is going to be starting soon, and this market is probably going to be a little bit quiet until morning. So like I said, you're gonna see how long it's gonna take for us for this type of trade on a 15-minute chart to get to the profit level, and obviously I'll update you guys on each step of the way. There's also one thing that I kind of failed to mention earlier, which is for those of you guys who are familiar with advanced pattern, we do actually have an advanced pattern here, so that would also be another reason to take a short on this trade, even though I don't think we have actually got to the entry point of the advanced pattern. The advanced pattern I was trying to point out here is right there. So we can see we got a potential godly pattern, but we haven't quite got to the 127 Fibonacci extension yet. So if this market decides to go, as you can see, no, actually we did get to the 127 extension. We just touched the 127 extension. So again, so we do have a potential advanced pattern as another reason for entry into this trade. So what is, you guys who trade advanced pattern, got a bearish advanced pattern in a bearish market, so that would be another reason to enter this trade. I've given you guys loads of different reasons in terms of technical analysis, in terms of understanding the structure, in terms of really everything, because what I want to do with this video, I want to show people that, listen, a lot of you guys must have come across a lot of people on TikTok or the Instagram or whatever. They'll just post some kind of quick video where they made £1,000 in like 10 seconds or 15 seconds or whatever. And guys, that is not real trading. That is far from real trading. Like, I'm telling you, I mean, if you want to be a trader, this is what it takes. This is how you make money in trading. It's not that easy. It's not that simple. If it was that simple, trust me, everyone would be doing it. But I want to show you the right way, and the right way is all about understanding structure, doing your analysis, doing your due diligence, because the most important part of a technical trader is the analysis that goes behind before the trade. That's the most important part. That's the part you need to focus more on. Placing a trade takes a couple seconds. When I started this video, I clicked a couple buttons and I placed a trade. But if you guys, you've seen the analysis that goes into the making of this trade. It's not just about looking at this particular structure. It's not just looking about what the market is doing here. It's looking at what the market has done before. It's looking at the overall picture. I can even go one step further and show you, because I did my analysis before I actually came into this video to place this trade. I've already done my analysis. But I wanted to show you guys the process that a trader goes through before they actually pick an actual trader, a professional trader, before they actually pick a trade. And that process is studying the structure of the market. Like I said, I can even go further. I can even go on a higher time frame and show you guys another reason why this is going to be a winning, well, I wouldn't say it's going to be a winning trade, because nothing is ever guaranteed, but the probability of this being a winning trade is over 90%, so we put this on a 4-hour chart. Well, for me to show you the reason, another reason I would have to delete all of this, and I don't want to delete them, but one of the reasons I was talking about is here. This structure here, the market has broken that structure. Like I said, I would have to delete all of this to show you, but I'm not going to do that. But you can check that on the Go chat. But the market has broken that structure, and I just explained to you earlier, guys. When you have a structure like this, impulse leg, contraction, break out of the structure, you have a bullish structure here. The bullish structure says if this market is coming down, if it doesn't break this low, then the market is gonna head up. But the market has already broken the low. When the market breaks the structure, it retraces a little bit, and we're getting the retracement. Now putting this retracement into perspective, putting the bullish structure that we had here, putting the contraction that we had here, looking at the whole impulse leg that we had here, taking into consideration what the market is doing here. You see, the whole process is a process that you go through before you place a trade. And to believe that someone is gonna put something on Instagram that takes 10 seconds to show you that this is how you make money in trading by just a 10-second video, I think by the time this trade is done, this is probably gonna be half an hour video. And there's not many people that are gonna watch the whole of this video, which is a shame. Because I believe you're gonna learn a lot in terms of how you do analysis. You're gonna learn a lot. But anyway, I'm gonna put it back on the 15-minute chart, and yeah. So right now we can see that the market is already starting to come down, but we're seeing a little bit of reaction here. That's because the market has come into the previous structure. It will do that. This is a normal market movement. It might come back down. It might go up, retest that high before we finally drop. So let's see if that's gonna happen tomorrow. Tomorrow being Wednesday, so let's see. Wednesday is usually the day with the most average pick range in the market, so let's see if we're gonna get that movement tomorrow. And so what I'll do is I'll pause the video, just get rid of this. I'll pause the video. Currently in profit of about £453. I'll pause the video and then I'll come back when it's made some progress. Hello traders, so it's been 15 hours since I placed this trade, and you can see that it is currently on a profit of about £1,400. So we're into the next day, because obviously I placed this trade the day before at around 4 p.m. It's now 7 a.m. in the morning UK time, and so now it's the point that I'm gonna start thinking about my profit, and obviously the obvious place where I need to take my profit is going to be at this previous structure low here. So I'm going to take this off, and so yeah, technically speaking, as a technical trader, understanding structure, once this market comes and breaks this low, then you've got a bearish structure, but the market would continue being bearish. Now, how low the market goes is anybody's guess. Now, nobody can actually predict how low that market is going to go, because according to the market, if the market breaks the new structure low, any part of the candle that breaks the new structure low, to the market, just like I said, the market follows rules. So if the market breaks the new structure low, to the market, it has already accomplished, it has already put in a bearish structure. Now, sometimes it can go a lot lower. A lot. Sometimes you might see people using the Fibonacci retracement to take profit at the 127 extension, and the market sometimes does get to the 127 extension. So, well, when we get to that structure, then you're gonna see how I'm gonna approach this market. It's gonna depend on a lot of factors. It's about managing the trade. It's not just about momentum is gonna come into play. If the market has enough momentum, you know, I might take my profit at 127 extension. So anyway, and don't forget, you know, at the end of the day, we had a risk of about £1,000. So now we're currently 1,500. So now we've just gone past 1-to-1 risk to reward ratio. Anything above 2-to-1, 3-to-1, and that's where you're gonna start thinking about taking your profit. So I'm gonna pause this video, and I'll come back to it obviously if the market gets close to this previous structure low. Hello traders, so as we can clearly see, now the market has broken this previous structure, and now at this point I will be closing my trade. So I'm gonna go ahead and close that position. So as you can see, the position has been closed. So if you remember, when I actually took this trade, the account was just over 10,000, and I've made almost 3,000 on this trade alone. And this has taken a total of I placed this trade a day before at 4 p.m. So 5, 6, 7, so around 19 hours in total. So almost a day. That's how long it took for this trade to go from the initial execution all the way to the profit. So I'm going to be uploading this on YouTube. I'm going to try and edit it and upload it on YouTube for you guys, so that you can see what goes on behind every single trade that a professional trader takes, in terms of the analysis and everything. Okay, alright, thank you guys for watching.